All righty. I want to welcome everyone to the Hurley Investments Financial Services Commentary on July the 18th, Tuesday. Obviously, last week we were not here, and the week before the 4th of July we were also not here, but it's glad to see some of you back. And give me a quick second. I'm going to shut a door. All righty. I'm glad to be back. To let you know, I'm recording this, so some of those that are not here today, we have a pretty small crowd. I'm going to get this off to them. But I wanted to start off with what I saw let's go over the last couple weeks. If we look at a chart, our Dow Jones were still bullish, but it's been a pretty rocky last couple of weeks. Looking at the chart, came down, tested the 50-day simple moving average, came up to resistance, came down and tested it, broke through resistance, yet we're sitting right back at that 21,500 level. Obviously, it's a bit of a resistance level right now, and our market hasn't quite found a way above it. With that said, there are some stocks that have been, how would I say, there are some stocks that have been a big weigh on the market, weighing it down, just causing some issues. We'll go through that here in just a bit. With that said, we look at the S&P, even a bigger drop down to test that 50-day simple moving average, hovering pretty close, a little bit higher, but hovering pretty close to that resistance level. Again, went down and touched it almost for something that I would call maybe a next leg higher. We also have our crossover to the upside on the MACD. And last but not least, if we take a look at the NASDAQ composite, that should also say bullish, but looking at roughly the same thing, coming on down, breaking the 50-day, spiking back up, but still sitting at that resistance level. If you were to talk to me right now, and if I was just to give you a heads up, in our market right now, our market has had sideways movement for 4 to 6 weeks. And today, as I was listening to CNBC and Bloomberg, the talking heads came up with the idea that you have to own either financials or technicals. So if I was to ask the group tonight, what's the advantage first of owning technicals? Because the majority of the talking heads saying you have to own FANG, you have to own the technicals. That's where we're going to see something. Why do you think we should be owning technicals? There you go, David. Yeah. Technology, good thing I'm spelling, technology right now represents growth. And again, taking a quick peek this year, a lot of the growth has come from technology. Some ridiculous growth. Some growth that obviously it's the growth that you want to see. I mean, it's growth. What else can you say about it? It's growth. If you were to ask me, and if I was to ask the group, and you know what, David, that is a good comment. It represents growth right now, but probably overvalued. Now, when you say overvalued, David, if I was to come through and just put a quick look our on our chart, technically speaking, it's not overvalued. So if you do want to call it overvalued, how would you define it as being overvalued? So I'm going to change that. Overvalued in what area? What area is technically speaking, there you go, Lance, and valuations, right? Or if you want to give a different meaning for that, earnings to price ratio. It could be your EPS number, right? Way overvalued. Now, that doesn't mean that Apple is, but when you look at something like, Google at 100 times earnings or 60 times earnings, you had Baidu at 28 times earnings. I don't remember what Facebook is, but I'm sure that's kind of ridiculous. Right now in technology, you have valuations that are more than stretched. Some obviously ridiculously stretched. I don't even know how Amazon makes any money, to be honest with you. And they really haven't until the past year. But valuations are stretched. So tell me, what's the problem with financials? Especially since financials are considered undervalued right now. Abraham, Lance, David, Mary. How are they undervalued? Okay, so yes, there are some that are fair valued, but in general, why are they undervalued? The other comment was undervalued, but how long can they stay that way? They are undervalued right now on a price to earnings multiple, right? Price to earnings multiple, definitely undervalued. Multiple financials are ridiculously cheap. But over the last year, financials as a sector has grown more than technicals. Interesting dilemma. So let me ask this question. Do you have to only own one sector? What do you think? Do you only have to own one sector? Of course not, right? There you go. Only owning one sector is not diversification, Lance. Obviously, that's correct. It doesn't have to be one way or the other. Just because they say that on Bloomberg or CNBC, you know what? They're just trying to, most likely, in my opinion, guess a stock, do a pick for you. That way you'll buy their newsletter. You know, guess a sector, do one of those I told you so, and off you go. I'll be honest with you, as I take a look at my portfolio, I've got Apple, I have Baidu as a technology international company, I have Facebook. I don't own Netflix because fundamentally they're not sound. Their fundamentals don't validate their valuations right now. I probably would never own Amazon, only because they've never made any money and they are completely bloated. Google is one I own, but because I'm looking at contracts and so forth, I really can't afford a Google in my portfolio, especially if I'm trying to do, 500 shares, there's $500,000. That's just overpriced for me. With that said, in my portfolio, I do have Bank of America, Zions Bank as a regional. I have had Morgan Stanley, but currently I have Citigroup. What do you think? Am I diversified in my portfolio with having equal amounts of Apple and Zions Bank? Thanks, Lance. Yeah, I mean, I would say so as well. I seem to be diversified. I've got some of the technology for growth. I've got some of the banks that truly have been the Trump trade. And if you ask what the Trump trade is, it's the expectation of deregulation, the expectation of higher interest rates, the expectation of Obamacare repeal, and the expectation of tax cuts. There are a lot of expectations that have gone into the Trump trade that really are fueling a ridiculously positive year this year. If you guys to look at the next couple months, there was talk last week on will we go through an August pullback, a 3 to 5 to 7%. I've kind of preached pullback and we got to get ready for it. But in all honesty, I look at a day like today where the market at one point was down, 113, I believe I saw. Maybe it was 103. Finished only down 54. We still have a buy the dip mentality right now in our stock market. Not a whole lot to worry about. Not a whole lot to, I think the complacency is ridiculous with the VIX at 10. I am going to lose money on a trade on the VIX that I couldn't quite get profitable on, that I stayed in till the last week instead of cutting some losses. There's a bunch of things that don't make sense right now, but if you can't beat them, join them. If it doesn't make sense to always overpredict in our second longest bullish market in history. Yes, I might have to wait one more quarter for Bank of America, which posed fabulous earnings, even though it did lose money and some of its trading side of things. Obviously, they didn't lose much as Goldman Sachs. Goldman Sachs has had 2 quarters in a row where they're down over 18% in some of their prop trading. It's kind of funny because people talk about averages and they know someone or something. Do you know if you were in some of the bigger names, the Edward Jones, the Goldman Sachs and so forth, you would be down double digits this year. Pretty significant. It's been a hard year. A lot of what should have moved has not moved. A lot of what should have not have moved is moving. It's as I look at it and I go through my fundamentals and do market checks and do sector checks, I do scratch my head sometimes and go, I don't get it. But just because I don't get it, Doesn't mean I can't be with them and join them on some of the things that happen. So it is what it is, and we'll just continue to try to do our best. But I am got to be honest with you. I'm quite happy. I'm not an einhorn who's gone ridiculously bearish. A good example of trading here and what not to do. Einhorn has been down significantly, again double digits year to date, but has played some positions in the market ridiculously short, expecting a move, and that's kind of the problem when you try to outguess the market. When you try to outguess the market, more often than not, you're going to get your butt handed to you, even if you are a billionaire. I'll be honest with you, I protect around earnings. There's some protection that we have not needed, but I'm not giving away the farm. And it is nice because I can then short some puts and short some calls and do what we need to try to pay some of that earnings off. I don't ever technically, or let me put this back, let me change it. I would never position a portfolio to be all one direction or all I guess it's all one direction. That's the best way to say it. If position portfolio all bullish, all bearish, you have a 1 out of 3 chance of being right. And boy, there are billions of dollars that are being lost on the Einhorn front that are now turning into booked losses after a year and a half where these positions are coming due. These shorts he's going to have to cover. And to be honest with you, Bank of America didn't look good on their trading. Goldman Sachs looks horrible 2 quarters in a row. A lot of their trading is commodities. A lot of it's options, a lot of it's currency. Kind of neat to see them losing all the way across the board, yet still calling diversification the best way to go. With all due respect, diversification, when you're directional and different directions, you can lose on diversification in every sector or every style of trading that you have. So please don't think that diversification is the best way to protect your portfolio. You actually can look at, go back to 76, 77, 78 after the Vietnam War, and you'll notice that the buy and hold or the diversification method truly has not been the best way to grow a portfolio. With that said, can someone tell me what's happening this week and why? What's happening this week and why? Okay, that's interesting, and that's true. Gridlock in Washington. Even though the Senate and House are Republican controlled. Lance, great way to say it. And in all honesty, I was thinking more along the lines of earnings and so forth. But yes, you are 100% correct. In fact, it kind of goes back to last week. The Trump trade is losing steam. Someone that is a true outsider to Wall Street, and pardon the way I'm going to say this, someone that doesn't give a damn about parties or getting reelected, is finding just how hard it is to be in the bureaucracy that we call the United States government right now. He still wants to make these changes, but as he's seeing, it's becoming extremely more difficult than obviously the man thought it would be, and he's frustrated. As I hear some of the things he says on TV, I would probably say exactly the same thing, but with a lot more swear words involved. The man's frustrated. A billionaire is finding out how he alone is going to change Washington, and he's giving his best go at it, but he is truly not accomplishing what he thought he would be able to. He's finding out the hard way that unfortunately there is more compromise in Washington, and unfortunately the things that need to be done are not going to be done like he thought they would. And the sad news is that's even with a really good idea that is probably the way that you're going to save the budget and the economy. I guess, how is that? It's the best way to control your deficit or to make the cuts where it's truly going to hurt everyone. Very tough to do, and he's finding out that not everyone that said they were going to give in and would do that are doing what they said. Imagine that. Someone saying they're going to do something in Washington and end up not doing it. Mary, you are correct. And the Empire Manufacturing came in at a 9.8 versus an estimated 13.0. If I can go ahead and go to today's numbers, export came in at 0.0 versus last month's negative 0.4, better than expected. Import came in at a 0.1 versus last month's 0.0. We had the NAHB housing index that came in at a 64 versus an estimated 67. And believe it or not, the net long-term tick flows came in at a 91.9 billion versus last month an estimated of 9.7 billion. So we do have some abnormalities here. We have some understanding that things aren't quite moving the way that they were supposed to during the summer months, but you know, I think it is what it is. That's the best way to say it. It is what it is, and I'm not going to be the first one to try to guess or understand what's going on, because a lot of the market fundamentals do not make sense right now. I'll be the first one to tell you. With that said, where the market's going to end this week, I'm going to go higher. But the reason why I'm saying higher truly comes down to earnings. And those earnings are not from the company like an IBM or, unfortunately, a Goldman Sachs. I think Goldman Sachs pulled down a lot of the S&P 500 and particularly the Dow. But I was thinking, as I look at it, I'm going to give July a 2% growth, but I'm looking at maybe Morgan Stanley tomorrow. Alcoa starts tomorrow. Qualcomm starts tomorrow. Valiant Industries could start tomorrow. Thursday, pretty busy day. Abbott, Microsoft, PayPal, eBay, AMD, Nucor, GoPro. I mean, there's a lot that's going on. Visa's the one I'll be paying attention to. A stock that I trade that has 81 cents of earnings. Probably will be a pretty hefty number that you have to beat. Interesting to see if they can do that. Slumberger on Friday. Not a whole lot going on except for options expiration on Friday. I found it interesting to see an options expiration that used to be a down day. More people are covering. With the market going higher, more people are covering those shorts. I don't know if this will be the month that there weren't that many bets that are expected on the short side, but we definitely have seen options expiration change from a down day to an up day, which typically means look for next Monday a big buy-in in the market. We'll see a big buy-in and we'll see how things work then. Internationally, Bank of Japan announcement where they're continuing the easy money policy will continue most likely on Wednesday. Not a whole lot going on internationally. I did have a comment how I'm looking to trade. I made the comment about wanting to get into Costco. I have still not gotten into Costco, but I'm now looking at it down at that 151 and thinking, you know what? At an earnings event, they could go really well. I might be looking at a straight June long call, spending something like $1,200, but I'd be looking for one contract. But I'm looking to make sure I could dollar cost average in if they did fall down to a support level closer to 145, 147. Kevin, why would you get in now? I like the bounce. They don't have earnings until October, and I would like to think the market's going to get smarter and realize, hey, we are coming up to a time where Amazon really does not mean that Costco is going to blow it and you know, $30, $40, $35 down because Amazon bought a company. Really, that makes no sense. We do have an earnings list that I kind of pay attention to. If it's okay with you, I'm going to share that for you. Apple has earnings on the 1st of August after the market closes. American Outfitters brand has its earnings on 9/7, and that's an estimated earnings date. Bank of America obviously had theirs today. We have Baidu, which is going to be 7/27 after the market closes. We have Citigroup, which is going to be 10/12 before the market opens. We have Clorox, which is going to be on August 3rd before the market opens. We have D.H. Horton, Home Builders, doing fabulous, by the way. 7/26, and this is before the market opens. We'll see if interest rates affected the sale of their homes. Disney on the 8th after the market closes. Some big revenues with movies. We'll see if the market understands that the media or ESPN isn't everything for Disney. All right, what else do we have? Ford, look at the run Ford has been on. 7/26 after the market closes. Hopefully I can protect them at 12 and see them run up to 13.5. Facebook has been on a tear. They are also on the 26th after the market closes. And Ford, excuse me, is before the market opens. Before the market opens. NVIDIA, 8/10 after the market closes. Visa is tomorrow, 7/20 on Thursday, excuse me, after the market closes. Zions Bank is 7/25 after the market closes. And last but not least, we have Costco, which is October 5th after the market closes. So that's my watch list. I am still looking at an opportune time to do some June 18 long calls for $12 at 150 on Costco. Kevin, why $12? Well, that's what they cost, but I'm just doing my math. $12 to back up to 180 at 151. I'm looking at $29 of upside for a $12 cost. I would expect that upside to kick in October, and I'm also not throwing everything at it. I am going to have some cash available that I plan on possibly dollar cost averaging once to the downside if it goes and tests the 147, 145 range. In retail, would you like Vips instead of Costco? No. I like the Costco story. So, in all honesty, if I was to take a peek at something else, like, Vip Shop Holdings, I don't know them very well. It's cheap, $11 up to 15 and a half. I don't know them very well at all, so I probably can't make an argument. The story here, though, why did they fall down from 15 down to 994? We have Costco just on the rumor that just on the news that Amazon bought Whole Foods. Doesn't mean Costco is going to tank. I don't know what caused a downward movement here. As for Dollar Tree, though, if I was to look at Dollar Tree, I see about the same. I guess the short answer is, Abraham, the reason why I would do Costco over these two, it's the story. They're down on the rumor that because Amazon bought Whole Foods, they're going to start to take customers away from Costco. I don't see that. The people that go to Costco aren't looking for dainty meals. They're not looking for good. I'm gonna say good for you meals. The word I'm looking for is slipping me. They're looking to go out and buy stuff in bulk for big families. In all honesty, I don't shop at Whole Foods, but I spend thousands of dollars at Costco because I have 4 boys that eat me out of house and home. So I don't see right now how Amazon buying Whole Foods affects Costco 29 bucks. I think they're earnings away from being right back up to at least 180. So Vips is obviously going to be cheaper, but for 1,200 bucks, I can get some June 18 long calls and play Costco directionally. So that's what I'm looking to do. Man, I hope I'm right. I'd love to make 12 bucks on the trade and be able to double my money there and do a couple contracts here and have a couple more down the road. That's my goal. I do have some news here that I think is interesting for you. Just to make sure you guys are contributing to your 401ks, your Roth or your IRAs, take advantage of, obviously, Roth and IRA opportunities, Roths especially. I found an interesting article, retirement expense becomes a reach for some as seniors are still in the workforce. They just need to keep making money. 2008 ruined a lot of people's retirement plans. Found a very interesting article on here's how Buffett's partner Charlie Munger uses psychology and economics. And I also found an interesting article that I thought was important for everyone in regards to pharmaceuticals, I guess is the best way to say it, but how there are still some people out there that are doing hedge funds that, believe it or not, are still not being honest with their returns. I know that's hard to believe, but for crying out loud, when you hear something that usually sounds too good to be true, guess what? It is too good to be true. So, what questions do you guys have for me? What questions can I answer for you to finish off tonight? Apple. All right, let's talk Apple really quickly. Um, yes, I own some Apple, and with that said, I think Apple is going to be in a bit. They're going to have a bit of a problem. Apple is not able right now to follow through with their super cycle. It sounds like on their iPhones and their iPhone 8 release. They typically release new phones in September, and to be honest with you, they are going to release a 7S and a 7S Plus. That's great, but people are holding on for the 8s, and the cycle is expected that they would have an 8 available in September as well, maybe November. Right now, it looks like we might not get some 8s till December due to the facial recognition software that they have, as well as now some of the other issues they're having with having their whole screen on the front side be the screen, which means they have to rearrange a home button, a camera, and those kind of things. They've already had the home button digitally anyway, so it shouldn't be too hard. But the short answer is I just think Apple run into some problems this earnings. It'll be easy to see how they spin it. And mark my words, if they do say, yes, we're going to delay the iPhone 8, you're going to see a pretty big drop down on Apple. It should be a buying opportunity. Make sure you have some puts in place. Get those puts in place. Be able to protect yourself to the downside. I would probably not add some short calls, because if they come out and say, hey, we're on track for the October delivery of the iPhone 8, you're going to see people piling quickly to purchase the expected earnings or the expected super cycle rush into the buying of phones. Yes, last year I believe was the first year they sold less iPhones year over year. If they do not have the iPhone 8 ready, you might see that same thing this year as well. So, Apple, interesting comment there, interesting thought process. Are there any other questions? Would you consider diversification to steel sector, for example, MT? Abraham, the short answer there is no. And I usually follow U.S. Steel. I don't. Which one is MT? If I'm looking at an infrastructure play for something like steel, I would be more inclined to move to a Caterpillar or a Deere. There is some good opportunity in steel, not necessarily with MT. Again, going back to U.S. Steel, which is X, look how far down it is. Alcoa would also be an infrastructure play, but I don't see the infrastructure growth worldwide. I don't see it in China, when China's trying to have a GDP of 6.5% right now. I don't see a steel play based on worldwide infrastructure growth. So for that reason, I would not necessarily be in the material sector, steel, Caterpillar. I just don't see it right now. It was talked about, it should have grown, but it wasn't happening. So plain and simple, Abraham, I personally would need to see some justification to be in steel, no matter which company you chose to do it with, and I don't see it at this point in time. That's also, though, to be honest with you, because I haven't spent much time in infrastructure. I kind of gave up on that to a degree. So I would stay away from it. And Dave, Ford. Uh, I just think Ford was undervalued. Undervalued, and it can have a pretty good pop. I could see Ford at least back up to 12 and a half, if not by the end of the year being in that $15 range. But that's only because it has gotten no love. And obviously, if it continues to have a bad earnings, watch it go back down to $10.60. I do like this breakout, though. Higher highs from March, April, May, and June. Finally got up above and closed at 1175. So I would expect Ford to come in with some good sales and at least get up to 12 and a half, if not back up to that 13 and a half range. But it looks like 12.6 going to be a hard level to get above. Anything else, guys? If not, I want to thank you for being here tonight. I will get this posted tonight or tomorrow. And glad to be back with you. Next week, I will probably not be doing one of these because I will be traveling, in which case I will try to do one on Monday and just email it out to everyone the link so you can watch it. Guys, have a wonderful week. I appreciate you being back. Good to be back, and I'll look forward to talking to you next week. Bye-bye.